Hi there. As of now, Dogecoin is down by about 4.5% this week. There are still over 5 days for it to develop, whether the bulls are going to be successful in defending the key price levels. So let's look at it through the Wyckoff lens and see what or where the whales is bringing Doge to. If you're new to my sessions, I'll cover the Wyckoff stage, trend change risk, as well as key price levels. These are education content, not financial advice. When we look at the weekly chart of Doge, we can see it's still at the early stage of accumulation cycle. So these orange text marks the stages of the accumulation cycle. The last one that happened was over here, back in 2024 around summertime. And then it's got a prolonged distribution, not until the very recently around November last year, it came back to accumulation. So it's almost a year later than quite a number of altcoins. So Dogecoin has been very resilient all the way in 2025. However, it's started to come down just a bit earlier than the big 3 or 4 just happening to come back to accumulation in probably last week or just starting this week. So for Doge, it's still going through the testing stage or just the early testing stage. What it is testing here, it first tested the October 10th tariff announcement day low. That's the red key level of 0.0964. You see last week, the bulls push the price back to above the red key level. This long wick over here. Now that we're starting this week with 1 day and 70 hours past, the bears are trying to push it, retesting whether there are sufficient bears to push it down or whether there are sufficient bulls to push the price up like what they did last week. Okay, you see these weights, the bulls and the bears are battling around this red key level. So far, as for this week, the bears is having an early upper hand. The key over here is that, if you look across, why that stopped right between the blue key level and the purple key level, that 0.0744 and 0.0857. If you look at here, not this one, this is almost exactly the same level. That was August 2024, the accumulation cycle that I mentioned, where the price got to near the panic or around the panic over stage. People or whales, most likely with this kind of massive motion getting in, but not pushing the price up all of a sudden, very skillful. The panic over stage, quite a number of capital flow in and bought the dip. And then eventually, after some tests, it quickly gone to the next distribution back in 2025 or late 2024, entering 2025. So we are at a similar point. We need a couple of more weeks to confirm. Okay, after the panic over stage, how far this test will go? Would it still come to re-challenge this level again between the blue key level and the purple key level, like what it did in 2024? Or if there are more bad news coming out, more uncertainty coming out, would it re-challenge the light blue key level or even the green key level? Look at what happened over here in 2022 summer, June time. The green key level of 0.0484. Okay, that's possible. Of course, we're not going to touch this prehistoric dinosaur period of Doge, where it was trading around or below 1 cent. Okay, that's not something we want to see, even though there is still a possibility. So the big picture is the testing period is still going to continue. It may still go up and down, sideways for a while. If you reference here, that's what it looks like for an accumulation cycle, or typical accumulation cycle with a reasonably long period. Not this one. You can still see the wiggle, but that was very quick. Here, what we need to see as a confirmation that people are willing to come back into Doge, or at least to risk-on assets like crypto, is something we call the sign of strength. It basically means a bunch of white candlesticks stacking up to re-challenge this light blue key level of 149.149 or even 0.1622, the blue key level above. Why these two levels? Why this range, right? Look at what happened over here back in January, just this year, okay? The price rose to this level. That's what we call the automatic rally from the panic over point. So this sets the trading range top. Okay, that's why I said it's somewhere between these two blue key levels. If the price comes up and with higher than average volume, that's where it's going to test, or best it's going to test this, so we can get the confirmation, the very first confirmation that money is willing to come back in. Not that it means it's over, because the whales can push it back down if there's sufficient uncertainty or bad news in the pipeline in the next quarter or 6 months or 12 months. It all depends on how they see whether they have sufficient fuel to boost the launch to the next moon. Okay? Daily chart, the micro view. February 7th has passed. Basically, that opportunity to confirm getting outside of the downtrend was missed. Now we are looking towards the 18th of February. It's still a bit stretched because you can see the price is being suppressed around the red key level. Now, in order to climb to get or give us a confirmation by the 18th of Feb, the price has to break the orange key level of 0.1112. The likely scenario drops to beginning to mid-March. If the bears successfully continue to suppress the price below the red key level, the blues successfully defend the purple key level of 0.0857, meaning the price will trade along this range, then somewhere between those two dates, we'll get the confirmation. Either it's going to break outside of this downward channel, or it's going to get rejected by the ceiling of the channel and come to challenge the blue key level. Okay? So we'll cover these in the future sessions. There are still quite a number of weeks before we get to those dates. If you're interested to get access to these sessions 2 days earlier than the others, join the channel membership now. Here's another video for you. Thank you.